Hello guys, so we are back on the charts with a new type of a video. Today we will be looking into a high probability setup on the Aussie US dollar. It's a very simple chart pattern, but it can definitely ensure that you pass your FTMO challenge and pass your FTMO verification. So let's take a look at this pattern. So the first one will be on Tradingview. I will be using the replay function just to get into the details. And then the rest of the patterns will be in a Word document. We will take a look at them a bit later, but let's first focus on this one. So this trade happened on the 22nd of April of 2022. It did actually pass me my FTMO. It was a very good trade. And let's dissect this pattern. So this pattern I actually call a large impulse then continuation, and it's really simple. It has three components. The first component is of course the large impulse. The second component is the small no shift in momentum pullback. And the final component, the third component, is a nice continuation with a clean close. So it is a three component type of a trade. Very simple, you can spot it anywhere. So let's now bring it to the right. You can just see it, large impulse, small pullback, continuation, really simple stuff. So for this particular setup, we got this nice impulse right here, really showing us momentum to the downside. We got this small pullback. We had a few candles, but it doesn't matter. What is it? 1, 2, 3, 4, 5, around 5 candles in the pullback. But I'm not seeing a momentum shift. What do I classify as a momentum shift in the pullback? Well, if you see a candle that's the same size or relatively the same size as the impulse candles, so if the pullback candle was as big as maybe this, for me that would be a clear momentum shift, because if you compare it to the impulse candles, it kind of looks the same. But look how small these candles are. Are they showing us momentum to the upside? No. They're actually showing us that the sellers are winning, that there are almost no buyers in the market, and that this is just the small pause before the price continues trending to the downside. And then we get this nice push down with a clean close, so almost no wick, which makes the trade even more high probability. Usually when you see a clean close in the markets, the price continues in the same direction as that candle. You can check that out, you can backtest it. I mean, you can just take a look here. Clean close, we continue down. Another clean close, we continue down. You will see what will happen after this clean close. Just a reminder, I trade only on the 1 hour chart, so this pattern is only on the 1 hour chart. So I have only tested this particular pattern on the 1 hour chart. It does work on many other pairs, but it works best on the Aussie and the US dollar. It has around 50% win rate, and the risk to reward is between 5 and 10. So the risk to reward is very good. So how do we actually trade this particular pattern? Well, I place a pending short order or long order, depending if you're going long or short. In this example, we are going short, either on the most recent low or on the inside bar. What is an inside bar? Well, it's a bar that is engulfed by the prior candle. As you can see, we have an inside bar right here. This is the one, and it is engulfed by the prior candle. You can see this high is higher than this one. This low is lower than this one. That means this candle is inside of the prior one. So we are placing our pending short. This pattern is traded with a pending order. So we place the order underneath the inside bar. Let's take our tool, let's place it. I put a 12 pip stop. So 12 pip stop is my default stop loss size for the Aussie and the US dollar. I always use a 12 pip. I never change it no matter what. If there is huge volatility and if the stop loss looks really small, then I'm just staying out of that particular setup. So 12 pip stop is my default stop loss size for the Aussie US dollar, like you can see here. Then we go on the replay tool, we click next. We see that we have been now tagged in, so it's a tap and the price is immediately going to a downside. So I'll be managing the stop loss according to my trading plan. We will not go into that this video. It's not really important, but just so you know why I am moving the stops. So I'm moving them above the most recent high. Right here we have a counter trend move. This candle is higher than this one. That means we now move our stop loss above this high, but again, doesn't really matter for this video. Let's just keep on clicking. Let's see how the replay function will play out. So it drops again. We can move our stops again right here. Let's see what will happen. drops again. We move our stops once again because a counter trend move has happened. And again, we move our stops right to here. And we get taken out for, I think it's 14.4 R, or if you're risking 1% as I am, that is a 14.4% winning trade. So a really good trade, a really good setup, really simple to spot in the markets. Let's now take a look at some other examples. Okay, so here we are in the Word document. Just a reminder, this is only the Aussie and US dollar. It's only on the 1 hour chart. And these setups have been taken from 2018, 2019, 2020, 2021 and 2022 until the month of October. So there are a lot of good setups here. They all look pretty similar. There are some little nuances, little differences. We will now go through them. And these are all of the setups that I have backtested in the last 5 years. So the first one, you can see I have the highlighter here. We have the large impulse. We have just a 1 candle pullback. And we continue with a nice red candle with a nice clean close. I can zoom in a bit. Here is that large impulse down, just a 1 candle counter trend pullback and a nice continuation with a clean close. That is also really important. A clean close makes the trade much more high probability. And then we place our pending order right here. There is a tap and then we go down. We pull back a bit, but that's why we have our stops. And we don't move our stops until we break the most recent low. And then the price just drops to the downside and makes a lot of percentage. So a really, really good trade. All right, so on to the next one. Here we see a prime example of why a clean close is really good. You can see clean closes everywhere and the price just keeps continuing to a downside. Almost no wick, no wick. So we have that large push down. We have a 2 candle, no momentum shift pullback, and we continue with a nice clean close, tap, and then we drop to a downside. So again, a really good setup. What is important here is that the price did try to retrace back to the upside, but the price could not be sustained. So the sellers clearly won. A huge wick to the upside was printed, and that's a good sign that the price will continue dropping. Next one, so again, large impulse, 1 candle pullback, and then we continue with a nice clean close. So very, very good. And what's also great about this particular setup is that the pullback candle is red. So it's a bearish pullback candle, as you can see here, which makes the trade even more high probability. Why? Because there's just absolutely no momentum to the upside. The buyers are non-existent. And you can even see the prior price action doesn't have to be high probability either. It can be just coming from a range bound price action. We see a drop, we see a small pullback, we continue, clean close, we place our order, it taps us in and drops to the downside. Okay, so this one price was clearly trending. We see push to the upside, pullback, we continue, clean close, we place our pending order at the inside bar, we get tagged in, and then the price moves to the upside. So this one is interesting because there is kind of a wider pullback, but again, what we can see, there is no momentum shift. The sellers are clearly not winning here. There is just a large momentum to the upside, a small pullback. It is kind of wide, but you can just see the size of these candles. There is clearly no strength in them. And then the price continues with a huge blue candle, prints a clean close. We place our pending long order at the most recent high. We get tagged in and then the price just starts trending to the upside. So another setup from April of 2022. This one actually ended with a huge wick to a downside, or actually a big wick to a downside. It's not that huge. But what matters is that we got a large impulse prior. We got just 2 candle pullback. We continued and there was clear momentum to the downside in this red candle. We placed our pending order at the most recent low, got tagged in, and then the price dropped, pulled back, but dropped again. And because we didn't move the stops to break even, we didn't get tagged out on this or on this candle. Instead, we were in and the price just kept dropping to the downside. So this setup works even if there is a wick. There needs to be a large prior momentum and the pullback needs to be just maybe 1, maybe 2 candles and these smaller candles like these here. Another one with a wick on the top, so we have a large impulse to the upside, We did end with a wick, but it doesn't really matter. We got just a one candle pullback. It was blue, which makes the trade even more high probability. So there are no red candles anywhere here. The sellers are clearly losing this battle, and the momentum is still to the upside, which is confirmed by this push to the upside. It did end with a big wick, but as I just explained, if there is large prior momentum, if the pullback is 1 to 2 candles, and if there is a blue candle in the pullback when we're going long or a red candle in the pullback when we're going short, that is definitely a high probability setup, and it's worth taking the 1% risk. The final one for today, so we have large impulse, one candle pullback, we continue. First candle actually has a clean close, so very high probability we will continue down. We do continue down, and of course after this second close we place our pending short order. For this particular example, I would wait for the second candle, since this just did not break by much, so this break was just not that big. So in this case I would wait for another push down. The wick doesn't really matter because again we have large momentum, just a one candle pullback, and we continue. We tap and then we drop to a downside, and again we make some good percentage. So that's it for this video, guys. If you're interested in learning more about this particular pattern, or you want to see it on other pairs, you want to see my data, you want to see how I backtested it, make sure you book a coaching call. Go to the link in the description, go to my website and book a call. Check out my YouTube channel, I do post some other interesting educational content. This is only the part 1. We will be doing more of these setups on other pairs and different types of chart patterns. So definitely stick around, subscribe, like this video, and I will see you guys in the next one.